Do I need collateral for an SBA loan?
Uh, I should say there are a couple of exceptions. In a regular case or in a normal situation, no, you don't. Let's say you're buying a property for $500,000, whether it's business included or not. And if you're putting a decent down payment, which means 15% and more, you do not need to put any additional collateral because the property you're purchasing, it will be your collateral. But sometimes the money is very tight. The income is not that much. The tax return is not very strong. The bank will say, hey, we're taking a little higher risk, but you have to give us additional collateral, which is, it could be your personal residence, it could be your another commercial property, investment property, and then the bank will say, you know what, if you give us additional collateral, we'll feel more comfortable to give you the loan. But for the most part, if you put 15% or more down, you don't need collateral.
Okay.
Additional.
Additional. Okay. It's just it all depends on I'm assuming the risk the bank is taking in order to fund your loan and your credit worthiness.
Absolutely, exactly. That's what it is. And then when you're buying a business only,
Hmm.
if you are not putting sufficient down payment, and because the loan is unsecured, and bank feels if they feel a little not very not they're taking a lot of risk, then they will ask you for additional collateral. Of course, SBA has a rule that when you're buying a business, if you own a property, uh, SBA will ask for a collateral. So you have, unless you have nothing under your name as a property, then they have no choice. But if you have something under your property and you're buying, getting an unsecured loan, like a business loan, bank is going to require some sort of a additional collateral. I have done loans without collateral, but then again, the borrower was very strong, good down payment, good cash flow. Bank didn't feel any unsafe to lend them the money, and they said, "Okay, yeah, we could do that."